Welcome back. Thanks for tuning in. I'm the ESOP guy, and we are continuing on this journey to an ESOP. This podcast is for those that are thinking they might want to consider an employee stock ownership plan for their business and have looked at different options. And this one is really about helping people to really understand the whole process. And if you're brand new to the podcast, I wanted to say thank you for joining today and welcome. You can find our other episodes on journeytoanesop.com. And really wanted to jump into this new episode today. And we're going to start off with a real story, an ESOP story. And this is going to be called the partial ESOP, the AOTC story. And it's always fun to review an ESOP and the history of how did they get there. And to do that today, we're going to have the opportunity to interview both Todd McDowell and Brian Barnett with the AOTC company. And they've been shareholders in this company for a long time and really looked at the ESOP as an opportunity for their company to grow and do different things. So we're going to get to explore that today with those guys. So thank you again for joining. And as we go into the podcast, I just wanted to say, there's a lot of different ways to use the ESOP. And from Brian and Todd's story, I think it'll be interesting too, because it's not a typical story where they're trying to exit the company. In fact, they're going to be there for a while. And so I think it'll be an interesting topic as we go into it. So with all that, I wanted to say to Brian and Todd, thank you guys for joining. This is your first time on the podcast, and I'm excited to have you here today.
Thanks.
Great. So
be here.
What's that?
Good to be here. Thanks for having us.
Excellent. So I kind of wanted to start off with this. I wanted to give you guys the credit for inspiring one of our couple of our episodes in season 1, episode 19 and 35. One was about merging entities for ESOPs, and the other was about 409P. And really, in both episodes, we used the Bill and Ted's Excellent Adventure movie. And let me just say that you guys were totally awesome dudes to work with. And I also want to mention your other shareholders, Kirk and Clint, because they're not going to be with us today, but they were also most excellent. So can you tell us a little more as we go into that, like about your story behind, starting the company and just kind of what it took to get this company up and running?
Sure. I am going to say though, on the episode 35, since we were the inspiration, that was kind of a scary one. Is he trying to say something, or is Mr. IRS going to be knocking on our door because we did something wrong? Why is he using us as an example? So that didn't put me at ease. But you did a good job.
I used you guys because your first name was Brian, B, and then T for Todd. And then I thought about the movie, and then I thought that was kind of funny. And then I don't know, but you guys did have both of those issues. You had family issues on 409P. They weren't insurmountable, but so that was the inspiration. And then you guys kind of remind me of Bill and Ted. I don't know why.
Well, family issues doesn't necessarily have to just be with ESOPs though, right? Everybody has family issues. Brian and I have, like Bill and Ted, have known each other for a long time. We worked together with the previous company. They went through changes. We got together, not at a Circle K, but at a diner, and we're like, let's go start our own thing, and okay, let's do it. And I think if we both really had time to think about it, considering it was 2008, the way the economy was, we probably would have said no, but thankfully we didn't think too far through it. So we started with a small focus on training and site safety, and slowly brought in good quality folks to expand our services. And long story short, we've continued to do that for the past 12 years, and that's where we are now. We always had a mindset that we wanted to do what we could, even if it hurt a little bit, for the benefit of the employees. I mean, even when we were small, we had, I think, benefits and perks that other businesses of the same size or even bigger didn't do. So that kind of fell into place with fast forwarding to 2018, I think, the first time we actually discussed it. And through you and another individual, we came to see that we weren't really ready yet, as far as size and financially. So we put it off another year, and then you walked us through it, and here we are.
Excellent. What about you, Brian? Anything to add to the story of starting the company? I mean, my thought was like when I met you guys, I guess a long time ago, really, but just that you guys really are pretty good partners, good shareholders. You don't always see that when I talk to a lot of different companies, and that kind of always stuck out to me. I mean, you guys get along really well. You complement each other, and there's not a lot of controversy, at least that I saw in kind of how you guys get things done.
I agree. I feel like we complement each other well as far as managing the company. I'm more the, like Todd likes to say, the dreamer. Everything is in the realms of reality, and then Todd tends to bring me back to earth sometimes. So that's good that we,
yeah.
And then also likewise, I feel like my component, helps, move forward. So they're not too conservative. We actually do take risks. I mean, like going into business, for instance, was a huge risk. And thankfully, like Todd said, we didn't dwell on it and think on it too much. I guess kind of like skydiving. If you just sit there and stare down at the earth so far below you, you'll never actually exit the plane. You just kind of have to, jump into the situation, which we did. There was a lot of lumps that we took, a lot of learning that needed to take place, but very happy that we did move into business, because there's nothing else that I'd rather do right now. I love coming to work. So I enjoy my job. That's always a good thing.
No, that's awesome. And I think that, you guys mentioned the 2018, and I know you guys have taken, your own lumps, as you say, going into it. Let's kind of go into like the specific nature of the ESOP. Like when you first thought about it in 2018, what were you thinking? I guess what attracted you most to the concept of an ESOP? That's kind of just getting it kind of started in your minds and thinking about how it might work.
Yeah. I mean, we, like Todd mentioned, we like to, consider our employees and, the decisions that we make, because it affects them as well. And I mean, I feel like we have a really good group of people. In a lot of ways, they're like family. I mean, I know we have about 42 employees, so it's a pretty good sized family, but they feel like family. And, we try and go out of our way to make sure that, that this career is kind of home to them. So we wanted to kind of consider that, we don't want to just chew through employees and have it be a revolving door. I mean, we want to keep people for, the long haul. Also, I mean, there was other aspects to it. I mean, just speaking for myself, I don't want to just work until one day I die and they put me in the dirt.
You don't want to do that?
I do want to retire someday. So, Todd and I have, talked about exit strategies and the different ways that you could, leave a company. I mean, we could just work until we're tired and flip off the switch one night and leave. And that's selfish and not a good way to end it.
No.
We could bring in another company to buy us out, but then, like I said, the employees are like family, and it's like, well, what happens to them when we leave? So this just seemed like a good fit for us, because one day I do want to retire, so I do want to be able to pull my equity out of the company. But also it's a way for the company to kind of exist beyond us. Maybe one day I'll be in the retirement home in my rocker, and I'll look back and I'll go, oh, hey, look, our company's still open.
That'll be awesome to think about. And legacy is a big deal, I think, for a lot of ESOPs. But what resonates into what you said is employees are family, and you think about, I think sometimes we are building companies and we don't necessarily think about the employees as much as we probably should. And so, So I think that's interesting. And I think that's very, a very common thread for a lot of companies thinking about ESOPs. What about you, Todd?
Yeah, I mean, pretty much the same feeling he expressed. Almost from the get-go, we had a good reputation, and folks approaching us to buy us out, merge with us, whatever. And we went down that road a couple times, and neither one of us, we like working, we want to work, but we didn't want to have to work for somebody else again. So the thought of being bought out and then having to report to somebody wasn't very appealing at all. So that led us into the ESOP, and once we learned the ins and outs of it and what that actually meant, that was more appealing. And like you said, we don't want to work till the day we die. I mean, that's a Ted quote, right? All we are is dust in the wind, dude.
That's right, dude. That's right, dude. No, that's true.
Eventually we're gone, so I want to enjoy the fruits of our labor.
Yeah.
But yeah, the employees have always been there, and it helps encourage retention. And even for the ESOP and trying to pitch the ownership to them, we've had a pretty low turnover.
What I love about it, and not just with your story, but it is true for your story, is so many times a company like yours creates a very unique culture, and kind of like its own secret sauce or whatever. And then when it sells to somebody else or merges, it's like you've lost something that was very creative, very innovative, very unique, and it gets kind of like rolled up, and it just becomes financial numbers and ratios, and then it's gone. So what's beautiful about an ESOP is you can literally continue on retaining the thing that you do. And I don't want to work for anybody else too. So that kind of hit me too. I'm like, I just assume, not that I'm, like I know everything. I just enjoy the creative side of things, and not being, put under this little box. Like, this is what you do. And, fill out your TPS report, which is another movie that, and I just think that's silly for us, when we can have the opportunity in this country to have our own company. So that's why I like the ESOP is the best of both worlds, because you can keep it going, and you don't have some evil private equity group coming in, taking over, and, dismantling everything that you guys have put together. And as long as you continue to build that culture and replace yourselves with people that have the same mindset, you could have a company that continues on with the same legacy and the same culture. So I think that is really cool.
No TPS reports, and no one's taking my swing line.
We watch the same movie, so that's all good. So anyway, going in, we're going to go into the process a little bit. So one of the thoughts I had is, like, this is more of a test question to you guys at this point. And what basically, when you roll this out to everybody, with your employees specifically, and when you do this, I mean, it is a little bit of a challenge, because people, you guys end up knowing a lot about the ESOP because you end up helping to, obviously it's your company and we created it. What concerns or questions or comments have you had from the employees when you did the rollout? And then how have you managed that process of communicating, really to them in terms of what is the ESOP? That's a tough question.
We've had a variety of questions. They've been kind of all over the place, anywhere from, so what does this mean for me? What are my shares worth? When do I find that out? When am I vested? When can I pull my equity out of the company? Just all over the board. I mean, we've done our best to answer these questions.
No, that's good. I think, and you're also, go ahead.
Oh, I was going to say, but also, we were, we got set up with a third-party group that kind of helps us relay information to the employees. We have email, like, kind of newsletters that go out that kind of explain different things, not always waiting for the question. We're actually trying to proactively answer some of these questions before they come up. So there's been that. I mean, we're still only, we finalized this in November, I believe, 2020. So we're still fairly new to this and still kind of learning as we go.
No, that's good. The company you're mentioning, and I'm okay plugging them, is Certified EO, and because I've done a couple podcasts with Thomas Dudley, and
Okay.
it's just a good resource. Yeah, so you're fairly new, and that's why that question's a little bit of a difficult one, but I think it's something that people have to think about. So if you are describing, like as it is right now, let's just say you have somebody that you're hiring brand new. If you're explaining the ESOP to a brand new employee, how would you guys do that?
Well, the first to the group was easy because we did the rollout and you were there. No, yeah,
you did all the explaining.
I did some of the explaining, but you guys did too. I mean, as much as you don't.
When we have a new employee, we just give them your phone number. No, I'm kidding.
And you haven't done that, so you obviously are explaining it to people, and some people are like, this is a good recruiting tool, and so kind of how would you go about that, and then we'll kind of fill in the blanks as we go.
It's mentioned in the handbook, and then we obviously there's an ESOP plan that they can read, but I mean, we try and do just general, I guess, just tell them, after a year that they're a part owner of the company, that they're given stock in the company that has value, that it's, and trying to explain, I mean, most people know, at least vaguely, even if they're young and maybe this is their first job with benefits, what a 401k is. So trying to think of it as another form of saving for retirement, that everyone gets shares and they have a value that's calculated every so often. Periodically, they'll get statements, they'll see how it's doing. And it's not us controlling it. There's a separate party of trust that kind of controls it for them. So it's a little peace of mind for them. It's not Todd and Brian have been able to manipulate anything, that there is a lot of oversight. Each has their own individual account after certain, and again, I don't go into specifics on time with getting out invested and all that, but over time, they retire or they quit, or the value is they get paid out for it. And then those shares actually go back in. So Susie Q leaves and had 50 shares and they're bought back. Those go back in and redistributed. So they actually get more again, which increases their value. And then you mentioned the certified EO. They are a good tool. I mean, I reached out to you trying to help reiterate the importance of taking care of their stuff, computers, trucks, things like that. So you give me a little example, and then we have two employees, Shannon and Tanya, that are the focal points. They put together a monthly newsletter with help from Certified EO. They reached out to them, see if they had any type of slide or anything that could help reiterate that. They put that together, and that's one of my biggest things, is trying to get through to the new employee that you're not just an employee. This is yours. I mean, this equipment is yours. The better you take care of it, the more the company is worth, and therefore the more you're worth.
I think that's good. I mean, honestly, I put you on that spot there, but that's perfect. I mean, what you explained is perfect. And I think part of it is what I like about you guys have gotten so far so quickly. Honestly, it's a brand new ESOP. I mean, we're literally last November. So it's like you've done a lot in a very short period of time. People, when the reality of this question, though, is that people will eventually get it more as time goes on, because what they're going to end up getting this year will be, for you guys, a participant statement, and then they'll see their stock in those accounts. And then next year they're going to get the same one. And then it's a matter of how many more shares did they get next year? And then what's the value of those shares from this year to the next year? And so that will be that'll kind of speak for itself when you get down to it. But I think you guys have done a phenomenal job of getting people up to speed, making a commitment with 2 people already in your company, hiring a third party, being that proactive this early on is really pretty solid way to go in terms of explaining it. But I asked that question because I think it's important for everybody to be thinking about how does that message get across? And I think if you don't communicate the ESOP well, some of the benefit of it doesn't maybe stick like it should. So if we shift over a little bit, you guys are like young guys. I know you're older than me probably, but I'm not sure how much older. But you're young people relatively. I mean, you weren't doing this for an exit, which when you think about the exit, like you said, hey, eventually I want to do that, but you weren't leaving tomorrow. So a lot of ESOPs, when people are thinking of ESOP, they typically think I'm going to do this for my exit strategy. And there's nothing wrong with that. That's very, very viable and legitimate. So for you guys being so young, you're basically giving up. When you think about what you did financially, you just gave up. You didn't give it up completely because you sold it. So you took that portion of the company and what it was worth today. So now the cash flow related to that stream of income is going over here to pay your debt back. And then it's benefiting the employees. So, you could have kept it and you could have grown it. So that was the choice that you had. So the question I have is like, what are the reasons that really compelled you to, go through, first off, the work it took to even put the ESOP together, which took a lot of your time. And then the money that took to do that, and then just kind of giving up that stake in the game right now. So what were the things that compelled you guys to do that?
Yeah, I mean, I think kind of like I mentioned, we wanted to make an investment in employees. We wanted to, I know, not on the employees kind of understand the ESOP at different levels. I mean, some of them completely understand what exactly is happening here. Some of them don't fully understand it, but are learning. So, I mean, we hope over time they understand the value of it. They understand that this is an investment in them, that like Todd mentioned, the better they treat the equipment that they use, adds value to the company and ultimately to their shares.
And vis-a-vis value to you guys. So whatever, the portion that you retain in the company certainly is going to grow in more value as well.
Yeah, so we're hoping for employees that are dedicated, treat this as a long-term career, not just a job. One day Todd and I will retire, and we want to, between now and whenever that is, bring in the management layers that we need so the company survives beyond us. And continues. Yeah, I don't know.
No, I think those are good.
It's the same kind of, the same as I said. I mean, we just, we wanted to be able to leave, and talking about the employees, I do my best if I'm talking to them, instead of talking about the company, I try to use the word your company. Like yesterday, we had 2 guys that did a great job. The client called and said, "These guys are awesome." So I reach out and say, "Hey, we got feedback from the client. Way to represent yourselves and your company, not Todd and Brian's company, but just trying to reinforce that they're representing themselves and their company. That's what benefits them."
No, I think it's good. I think what I would add to what you said, I mean, really, that there's a sense of, and I think this is to me, it was interesting, and this is the reason I was asking the question, is there's a generosity that says, "Hey, I'm gonna make an investment in my people now." And of course, I think and like you guys are very employee centric. I think for some people, maybe that's because they're really thinking, "I'm going to make this investment now strategically, have more value." I think all that stuff kind of will take care of itself, but there is a sense of generosity to stopping and saying, "We're going to do this, really for the employees, because it's best for everybody in the end, for them to be thinking about this as being their own company." So That's all I would really add to that. And, just say again, I think sometimes people don't realize the amount of effort and time that you put into that, and that you didn't really have to. So going into the process of doing this ESOP, what surprised you the most in the process, and why? Because you didn't really know what you were getting into. I kind of explained it to you, and then we got into it. Or were there any surprises?
No, I mean, it was involved. I mean, I guess when we first discussed an ESOP, I'm thinking, draft up a document, we sign, we're done, it's all good. I guess as we went on, it's like understanding all the components, the trust, the trustee, the valuation team, all these different components that make it up, and how it all works together. It was very involved process. I mean, it took us, like Todd said, we started talking about it in, I guess, 18. Wasn't a good time. We were just, we weren't financially ready. There's a lot of things that we still need to take care of. When we did decide to move forward, it was a process. It took roughly a year, I believe. I don't know exactly the time frame, but it was about a year. So, but yeah, I mean, it was good. You walked us through all that. There wasn't like any huge surprises. The things that you did lay out, the cost, the investment, all that. I mean, it pretty much played out the way you described. So
That's good. Anything from your standpoint, Todd? Or was it just pretty?
Pretty much the same. I mean, you don't know what you don't know, right? So the complexity of it kind of caught me by surprise, of all the different cogs that are involved, yourself and the valuation, trustee, banks, accountants, all that. And those.
Yeah, a lot of people to deal with, a lot of different people doing different things. One of the things I noticed about you guys was, you pretty much got to a point where you did trust these people, including myself, and not like trying to second guess a lot of things. You're like, so you really did. I think it went really well, because you just kind of like said, all right, that's what we're going to do. We're going to do it. There's decisions you had to make, but I think you really trusted everybody in the whole process, and I think that's a real interesting part of it, because it's not, I think there's a point in the process where like you said, you started in 2018, you did some of your own research and your own homework before I think we even started talking. And then, so you had some baseline. And I think the idea is, the advantage for some companies that are thinking now, maybe in a couple of years, is getting involved in like an ESOP association or an NCEO, or listening to the podcast or whatever, get the information and start asking questions. I think that probably helped you guys do that, early on, as far as just jumping right in cold turkey. So going in, so now we go in, like, people are like always like, well, what's this going to cost me? We get that question from everybody, and I always have to say, it kind of depends, and it really always depends exactly on what you're setting up in the ESOP. From your standpoint, we already mentioned this, but do you want to go into more detail in terms of the cost itself? You said it was kind of what you thought anyways, but what was your experience there, from budgeting to actually not only the cost of setting up the ESOP, but now the cost of maintaining the ESOP?
I guess in the very early stages, when you were describing how it would work and the cost associated with it, you threw out a number, and I'm not gonna lie, when you threw out the number at first, I was like, what? Like, why would it cost this much? But then as we learned all the components that are built into it, I mean, we're dealing with attorneys, we're dealing with all these different teams that are helping to pull this together, and make it a success. It kind of, it made sense. So from our experience, the numbers pretty much lined up with what you originally estimated. It cost us about $100,000 to, from day one to, us having the, employees come in and, this is now your company, which was like I mentioned, it was about a 12-month process. So, I mean, it pretty much fell in line with what was estimated. Now moving forward, that cost is going to be, much less. That initial investment was large because of everything that was involved in it. But now we'll just have annual valuations, the shareholder reports that go out, things like that. So it's going to be a maintenance item every year, but much less obviously than the initial investment.
Yeah, and I think part of that too. I mean, we didn't get into it at all, but now you guys are, you have a tax exemption on the portion of the company that the ESOP owns, and in addition to that, we get to deduct taxes, the principal contribution you're making every year for the ESOP note. So there's, those are things that offset the cost as well. But when you get down to it, they should balance each other out, or actually there should be some level of ROI there for the company. So just balancing out the budget.
Mm-hmm.
So Todd, anything on your side with that?
Initially is a pretty big sticker shock. So
yeah. And I think getting prepared for that. Now, let me just say it this way. And the reality of the ESOP world, first off, costs for other companies can vary greatly. And not to say, like, for you guys, this was a considerable amount of money in the sense, but there are ESOPs that get put together that are way more expensive than that. And, so the reason they're more expensive is because typically an ESOP transaction is handled by an investment banking firm, and the investment banking firm is charging a percentage of the total sale. And so like in your case, say that was 1% of the total sale, you would have seen your cost probably double or triple, and so that's more of the, just to kind of speak it out from not only just for us to talk about it, but it's just for people that are thinking about costs. That is like the norm, like in the industry, that's really the predominant way ESOPs are put together. So, what we did is kind of unique, and it's only because there's probably a few people that are doing it the way I'm doing it. And, the trustees still getting paid about the same, the valuation firm still getting paid about the same, the ESOP attorneys are still getting paid about the same. It's the major variant there is that investment banking firms treat it like an M&A transaction, and they charge like in an M&A transaction, you charge a percentage of the total. And so that's kind of just for everybody's, not as much for you guys because you're done, you've already spent your money. But had you gone with an investment banking firm, it would have cost you probably double or triple. That's the reality of it. And it wouldn't have been any different, to be honest with you. I mean, and so, and it's not like I'm against investment banking firms. I just think the whole point of this podcast is that people know to ask the right questions. And what the question I would say is ask, tell me how your cost structure works, and then make sure that the people that you're working with are qualified to do the work. I mean, obviously both of those things need to be, intact. So, so kind of moving into like the final question thought, and I have a couple of thoughts here just to finish up, and we could talk about your ESOP like probably all day long, and it would be interesting. But I thought is there anything that you guys, this will be the first part of it. Is there anything that you guys learned in the ESOP process, whether it was doing it or the 2018 kind of getting into it, that you thought about, that you thought there was true about ESOPs that you realized they're not true? So myths, misconceptions. Is there anything that you actually discovered from that standpoint?
I guess when it comes to maybe control and information that needed to be shared, like our financials, is okay if the employee is now an owner, do they have the right to see our P&Ls and our financials, which I wasn't crazy about, but which that came to be not true. Same with executive decisions. Are we going to have to put everything out for a vote now, get everybody together to make any type of change or anything like that, which also not true. And I think at the beginning, I thought that it was going to have to be 100% sale, that I didn't know anything about portions, percentages, and things like that.
Cool. No, that's good. Yeah. And I think Todd, I'm actually doing a new podcast on that idea behind it. Cause there's so many people that, they have these thoughts and they don't know what you don't know. Right. So you just, until you go through it, you probably don't even, there's people thinking something that, well, that I'm not doing ESOP because of what you just said. Like I've got to share my financial information, or I've got to lose control over my company, or, I got to sell 100% or nothing. So even, and some people think that I have to sell 30% of my company, because of the 1042 rule. But that's not true either. You could we do 5% ESOPs. We do, much smaller ones than that. So it's a matter of understanding, like, you just got to do your homework and ask the right questions. And the reason I asked that question specifically is because I think that, and again, the purpose behind all of this is to help people think about the ESOP as a viable option. And the problem is they may not be getting the best advice from not that their CPAs are bad people or their attorneys or bankers or whatever, but if their advisors don't do ESOP work, then it's really highly probable that they're going to get probably wrong information, because when you ask an advisor a question, they're probably not going to want to tell you they don't know it, right? Most people are going to be like, oh, well, I know about ESOPs, and they'll tell you what they don't know, or they'll tell you something that's not exactly complete. So, and I think that's where all these myths and I'd say misconceptions probably come from. Because naturally, when you think about doing an ESOP, you're going to go to the people that you do business with. So
it helped too. I mean, you put us, well, the very first time that we discussed and thought about this, we met with Will Rodriguez. He walked us through that, and then he told us about the CEO, right? Is that right?
That's right.
And so I went to one of their conferences up in Pittsburgh and sat through some sessions. So that helped too, to help reinforce what an ESOP is or isn't. So that was definitely beneficial.
Yep. No, I think that's great. So the next part, it was just kind of, and this may be nothing, but you might think, wow, we could have done that a little bit differently. What would you have done differently to improve and I'm going to use my journey to an ESOP thing, but your journey to an ESOP, or better, or nothing? I don't know.
Me personally, I don't have any issue with the way that it progressed. I mean, it went smooth in my opinion. So I can't really see anything that I'd do different. I mean, I would have liked to have done this sooner if we could have, but it just didn't. It just wasn't a good fit for us financially to do it sooner. It was better for us to wait, but that's the only thing really. It's just, if we could have did it sooner, I would have.
Anything for you, Todd?
Yeah, kind of the same thing. I mean, you mentioned lumps in business. I mean, we had a lump in business in 2017, so it really wasn't the right time. But yeah, if it would have been possible, jump in the time machine and go back and fix some things sooner and start stuff sooner. That's cool.
Yeah, we need a time
machine.
Time machine. I'll tell you what I would have done differently. I would have we would have gone golfing more.
That's true.
But we're too busy.
Yeah, they negotiated the Century Country Club membership into it somehow.
Exactly, and I failed you on that point. I wanted to, but I wasn't able to pull that off. So, so as it's
a learning lesson for the next guy. They know now to plug that in. So
they know now to negotiate with them, like to get the Century golf membership out of the deal.
Yeah.
So
I would have, like I mentioned, the conference. You're setting this up and still doing the daily routine is a lot, but I kind of wish I would have maybe paid attention more, gotten more plugged in and learned as I'm going, instead of now trying to catch up. And every once in a while I'll check out your podcasts and read emails that come in, but it's kind of like growing up and going to school. You put things off, then you got to play catch up. If you just start from the beginning and made it a marathon instead of a sprint, So I think I'm in a sprint right now, trying to get educated.
Yeah, well, certainly, and knowing that you need to be. I mean, that you're kind of I mean, I think some people don't realize how much being the business owner and having the ESOP really is important for you to know and understand it. Especially like I asked you that question about how do you explain it to new employees? And you did a great job, by the way. And so it's partly that. It's partly to know, what the next step is for you guys as we go to, if you do another tranche or another sale, you'll know way more going into that, into the next process. So as we kind of wrap it all up, what would be some comments or some advice that you would give to people going through the ESOP for the first time?
Do your homework. Don't be scared.
Do your homework. Don't be scared. What about you, Brian?
Yeah, the same. Just start to understand it, before you, start to go through the podcast, do your reading, do your homework before you go diving in, so you know exactly what you're getting into. Not that it was a bad experience by any means. It was
Sure.
a good experience, but just understanding it before you start going down that road, and then things start flying at you. You don't want any surprises.
Know what you're talking about before you got asked to do a podcast.
Yeah.
Oh, come on. You guys did great. No, it's awesome. I mean, I think that's the whole thing. It's like you guys have gone through this, and I appreciate you doing, just spending the time to do that. Obviously, it's really helpful. You're giving back to the ESOP community that way. So thank you guys for doing this today.
Sure.
Thank you. Thanks for your help.
Cool. So as we close out, I just want to remind everybody, if you like the podcast, subscribe and share it with a friend. And with all of that, have a great day. We'll look forward to our next step on this journey to an ESOP.